All right, this is the first AM macro on Thursday, July 17th, 2025. And we have the first AM macro right here. You can see that price traded into a 1 hour fair value gap that was bearish right here and put out this displacement over the low here. We had displacement here. Okay. And we had another fair value gap. So an enticing entry would have been right here on this candle as per our model. However, the draw on liquidity here is these equal highs up here on the 15-minute and on the 1 hour. So we had this 1 hour fair value gap, as you can see here. Price then respected it, put out a sell model here, which I did not take for two reasons. Same thing as I made the video yesterday. We needed these internal highs to be taken first right here. And you can see price did not take out these highs. So when this came out right here, I was not interested in taking the trade whatsoever. We have this bullish fair value gap in here, and you can see price is now going, but I really don't care. Like I could care less if I miss it or not. It wasn't our model. Also, with these fair value gaps here, you have improper stop placement as well. So that's reason number two. You can see if I put a short position on this fair value gap right here, my stop loss would have to be, minimum 52 to cover both fair value gaps. So I did not take it. And I'll be looking for some more trades in the second AM macro to see how price reacts off these bullish fair value gaps right here. Chances are this is a 15-minute bullish fair value gap. Chances are you could see something like price is going to respect it, maybe go take the highs later. We did not take the internal highs out in this range here. Once again, that is the model when we don't take external highs on a higher time frame or old highs and lows, right? Because the chances of this market coming up and taking these equal highs here are so great that it makes this trade highly improbable. So we're going to wait until the second AM macro, and we're going to look for potential buys. I know that these times are all in Pacific and they're not in New York, and I will be converting that shortly for everybody. So we entered this trade here off this displacement over these highs right here that were in this breaker block right here. We had the price come down to the 50% of this PD array here. So you can see price came in underneath this 50%. We had this market structure shift here, a sweep of liquidity here. We came up and then we respected the 50% of this PD array from this low to that high. Price then came in and respected PD array in the 5-minute below in the discount range. So we had this candle here displace over these mitigation blocks right here. Prices come down, tap back into the mitigation block right here. Now we are trading against this 15-minute fair value gap, 5-minute that's bearish. We're also in a 4-hour that's bearish, but I believe we are trading above this daily previous high and that we are bullish and that we have this. See, the draw on the 15-minute would be these equal highs up here is what I believe is the target. Now, I'm going to just take 60 points for today. let's just wait and see what price does. So if price makes a new fair value gap here, what I'll do is I'll move my stop loss to the low of the fair value gaps. So if price respects this fair value gap here, I will move my stop loss to the low of this, which it basically is right now, but I might move it up into right here. Anyways, and there we go. We secured 60 points on the day. Stay tuned for a trade recap on this trade. Should be out tomorrow. All right. Have a great day. And that's all we're going to do for today. I will, like I said, explain that trade in full detail in my next video.